You may know Kevin O'Leary better by his nickname, Mr. Wonderful, but he is actually the chairman of O Shares Investment Advisors. Both CNBC and Shark Tank have featured him as a guest expert on their shows, and watching him on TV, investors will have gotten a sense of his investment ethos. Mr. Wonderful prioritizes stocks with three outstanding features: reliability and consistency, multiple market structure, and dividend yield from equities. In this video, we'll be discussing 6 of Kevin O'Leary's dividend stocks you can buy and hold forever. Stick around, you don't want to miss the number 1 stock. Number 6, T. Rowe Price Group. This stock, denoted by the acronym TROW, possesses a dividend yield of 4.5% as well as a percentage OUSA portfolio value of 3.22%. As a result of this, astute company investors and holders such as O'Leary own dividends such as these. T. Rowe Price Group is one of the largest publicly traded asset managers in the world. The organization caters to individuals and institutional investors, retirement plans, and financial intermediaries by offering a comprehensive selection of mutual funds, sub-advisory services, and separate account administration. T. Rowe Price reported their financial results for the second quarter of 2023 on July 28, 2023. The second quarter ended on June 30th, 2023. The revenue from the quarter increased by 6.6%, reaching a $1.61 billion and exceeding projections by $20 million. Adjusted earnings per share of $2.02 compared to $1.79 in the prior year, which was 29 cents better than what was predicted at the time. Assets under management, AUM, reached a new high of $1.399 trillion, representing a 6.8% quarterly gain. The increase in market value of $57.7 billion more than compensated for the net outflow of consumer funds of $20 billion. T. Rowe has maintained consistency over time, which makes owning its stocks one of the best choices you can make. Number 5. The McDonald's Corporation, MCD. The fact that McDonald's Corporation boasts a dividend yield of 2.2% and a percentage of OUSA portfolio of 3.2% gives it a significant place in Kevin O'Leary's top dividend 6 table. With approximately 40,000 stores across more than 100 countries, McDonald's is the most successful global food service retailer in the world. Roughly 93% of the shops are owned and run by their respective proprietors. Since it started paying dividends in 1976, the firm has met all of the requirements to become a dividend aristocrat. Each year, it has increased the amount of money it distributes to shareholders. The results for the second quarter of 2023 were reported by McDonald's on July 27, 2023. After considering the negative effects of currency fluctuations, the company's total revenue came in at $6,497.5 million, which is a 14% increase from the $5,718.4 million when compared to the second quarter of 2022. The revenue generated by company-owned stores increased by 18%, while the revenue generated by franchise restaurants increased by 12%. As a result of the decreased operating expenses, diluted earnings increased by 97% to $3.15 per share, up from $1.60 per share in previous comparable periods. Number 4. Johnson & Johnson, J&J. J&J takes the number 4 slot on O'Leary's list of the top 6 dividends to buy and hold forever. It has a dividend yield of 2.9%, and the percentage of the OUSA portfolio that it makes up is 3.98%. Johnson & Johnson is a dominant player in the medical industry all over the world. Consumer, pharmaceutical, and medical devices and diagnostics are all the 3 business divisions that are now being run by the corporation. There are around 250 subsidiary firms that are part of the corporation. These companies have operations in 60 different countries, and their products are sold in more than 170 nations. Johnson & Johnson released its financial results for the second quarter of 2023 on July 20th, 2023. The second quarter of 2023 ended on June 30th, 2023. The total income for the period increased by 6.4% to $25.5 billion, which was an increase of $860 million more than was anticipated. The adjusted earnings per share came in at $2.80, which was 18 cents higher than what was anticipated and was a favorable comparison to the preceding year's figures of $2.59. When unfavorable effects of currency exchange are factored out, sales increased by 7.5%. On a reported basis, pharmaceutical sales increased by 3.1%, but without currency conversion, sales increased by 7.2%. Because the company's dividend had been increasing for more than 60 years running, analysts consider it to be a dividend king. Number 3, Apple, AAPL. Because AAPL has a dividend yield of 0.53% and a percentage of OUSA portfolio of 4.08%, savvy business magnates like Kevin O'Leary know better than to let it slip through their fingers. Apart from manufacturing tech devices, Apple also has a business that deals in services, such as the sale of music, applications, and subscriptions. The fact that Berkshire Hathaway, BRK.B, has the largest stake in Apple, AAPL, makes the tech behemoth one of the most valuable equities owned by Warren Buffett. On August 3, 2023, Apple announced their financial results for the third quarter of their fiscal year 2023, which ended on July 1, 2023. The last Saturday in September marks the end of Apple's fiscal year. When compared to the previous year's third quarter, Apple's sales were down 1.4%, coming in at $81.8 billion for the period. The fall in product sales was 5.7%, which was driven by a decline in iPad sales of 19.8%. The iPhone sector, which accounts for 48% of total sales, experienced a decline of 2.4%. The revenue generated from sales of services climbed by 8.2% to $21.2 billion and accounted for 25.9% of the total revenue generated during that quarter. During the second quarter of 2022, the net income was $19.88 billion, or $1.26 per share, compared to $19.44 billion, or $1.20 per share during the same period. Number 2, S&P Global Indexes, SPGI. On O'Leary's dividend table, SPGI, or S&P Global, takes up the number 2 spot with a dividend yield of 0.92% and the percentage of the portfolio that it accounts for standing at 4.27%. S&P Global is a worldwide provider of financial services and business information. With a market value of $113 billion and revenues of over $12 billion, S&P Global is one of the most profitable companies in the world. It provides credit ratings, benchmarks and indexes, analytics, and other data to participants in the commodities markets, capital markets, and automotive markets through its many business sectors. Since 1937, S&P Global has consistently distributed dividends to shareholders, and for the past 50 years running, the company has increased the amount of each distribution. On July 27, 2023, S&P reported its earnings for the second quarter, and the numbers were not entirely consistent. The company's adjusted profits per share came in at $3.12, which fell short by 1 penny of analysts' forecast. The revenue increased by 3.7% to reach $3.1 billion, which was $40 million more than what was anticipated. Revenue increased as a result of widespread strength through the company, which included an increase of 8% in subscription product sales. Number 1, Microsoft Corporation, MSFT. We rank Microsoft Corporation first on O'Leary's Top 6 2023 dividend table because of many things. The massive software and licensing company has a dividend yield that comes in at 0.83% and a percentage of OUSA portfolio that is 4.84%. Microsoft Corporation is a multinational company that was established in 1975 and has its headquarters in Redmond, Washington. Operating systems, commercial software, software development tools, video games, gaming gear, and cloud services are among the products and services that this company provides. Late in July, on July 25th, Microsoft disclosed its financial results for the fourth quarter of fiscal 2023. The company's fiscal year ended on June 30th. In comparison to the same period the previous year, the company's sales increased by 8%. Intelligent cloud and productivity and business processes both contributed to the expansion of the company, each growing by 10% and 15% respectively. Azure, Microsoft's rapidly expanding cloud platform, experienced a 26% increase in sales. As a consequence of this, profits per share increased by 21%, from $2.23 to $2.69, and they were 14 cents higher than the consensus estimate of the industry analysts. Although there are various dividend analysis research databases, not all of these stocks are currently considered buys. Earnings per share growth, dividends, and changes in the price-to-earnings ratio are all used by many analysts to determine a stock's ranking. However, a long-term dividend growth portfolio would benefit from having multiple of these 6 equities. Because of this, O'Leary recommends they be purchased and held by as many long-term investors as possible. Remember to subscribe to our channel if you found this content valuable, and I'll see you in the next one.